Joining us now is T.Rowe Price Portfolio Manager Dom Rizzo. He manages the Global Technology Fund, which holds Apple, Microsoft, Amazon, among many other tech names. Dom, it's great to have you back on. It's almost like where to start here. There's going to be so much for us to dig into. And so I think the place I do want to start is that according to Morgan Stanley, last week it was the largest selling period in semis since 2022. Investors are now most underweight Mag 7 relative to the market since 2016. Given those statistics, has the bar come down for the Mag 7 names that we're going to hear from this week?
I do think the bar has come down, Morgan. It's a great observation. If we look at the numbers, a few weeks ago, the Qs were up 20% year to date and the IWM was flat. Now we're kind of looking at them roughly at parity, right? Big tech overall has corrected 15%. So we've seen a pretty substantial pullback. And if we think about that pullback, there's a couple reasons why. Number one, people are looking for broadening out of earnings growth beyond the Mag 7. This quarter, the Mag 7 is expected to be 50% of the earnings growth for the S&P 500. If you look at the estimates into 2025, that number comes down to 10%. Now, the question is that right or not? My gut is that the tech earnings are going to come in better than people expect.
Okay, so Microsoft tomorrow. AI investment translating into monetization. This is a key trend. We saw this playing out in the digestion of results from Alphabet and Tesla last week. How are we set up with Microsoft and beyond?
Well, the big question is all this CapEx spending on Gen AI going to return any return on investment? And I think it's kind of not exactly the right way to frame it, because if we look at the core businesses of, say, a Google, that performance max is really accelerating the Google revenue growth. And that's why we've seen search put up a low to mid-teens growth number. If we look across software, we've actually seen really strong software numbers this quarter. SAP, current cloud backlog, up 28% year over year. ServiceNow seeing their CRPO grow 23% year over year. So when I look at Microsoft and the setup on the Azure growth rates, I'm feeling pretty positive.
Dom, I'm most curious of these names probably about Meta, because more than the other, it's done nothing stock-wise for 6 months, since the beginning of February. And all they have to do, it seems like, is announce some further cost discipline, and it would probably excite some people. I don't know whether they're going to do that or not, but it was the YouTube piece of Alphabet's business that was really the disappointment. And I don't know that that aligns to Meta as well as the other part of Google's business that did better. What do you think?
I think the way you're thinking about it is right, John. The number one use case for generative AI today and parallel-based compute is improving the ad tech stack, right? And that's why we saw strong numbers out of search. Like you said, YouTube was a little weak. And the question is, what's Meta going to do going forward? My gut is this Meta earnings season's a little tougher just because we have really tough comps into the back half of the year. So we're going to have some very natural deceleration. But if you look out 6 to 12 months, maybe that will reverse. The other thing that you have to deal with Meta, and I'm sure we're going to talk about NVIDIA, is what does the capital intensity look like going forward? My gut is CapEx keeps creeping up for all of these guys, and that's going to be a tough setup for something like a Meta.
Well, what about the likes of an Amazon, then? I'm going to avoid NVIDIA for the moment, because Amazon's trying to make the case. So we got Trainium, we got Inferentia. We're going to be efficient with our hardware that moves toward AI. Are they more affected by the overall consumer trends and perhaps benefiting from people wanting deals, or are they more affected by the overall trajectory and momentum of their cloud business and how much they need to spend on infrastructure to keep that going?
Yeah, I think there are two things that matter for Amazon going forward. And the first is the AWS growth rate. Are we going to see sequential acceleration in that AWS growth rate? And so far, the main data point that we've had on this quarter has been the Google numbers, right? GCP saw Google growth rates in the cloud go from 28% last quarter to 29% this quarter. Now, with AWS, my gut is we see continued sequential acceleration. The other thing that matters are, do we see continued operating margin expansion on the core e-commerce business? And my gut is yes. We have the ads flowing nicely. I think Prime Day went well. And if you put that all together, we should have nice operating margin expansion for the company.